Hi, I'm Jeff Lowe, Managing Director of Asian Sky Group. Welcome to Asian Sky Media's Fleet Week. I hope you enjoy the next presentation. For more information on Fleet Week, please go to Asian Sky Media's website, asianskymedia.com, to find all the information you need there. Thanks. Hope you enjoy the presentation.
So hello and welcome to this Asian Sky Group Fleet Week virtual briefing initiative specifically focusing on business travel and business aviation during these challenging times that we all face. I was kindly invited to share with you the impact on sustainability within air travel to complement the article piece that I've written for the Asian Sky Group Fleet Report 2019. So with that said, I'd like to quickly introduce myself. A lot of you may know me already, but my name is Michael Walsh. I'm the CEO of Mobi and PBEC, which is the Pacific Basin Economic Council based here in Hong Kong. We basically provide what we like to call authentic intelligence and advisory services. So acting like a super connector, if you like, for business leaders with each other and regional government officials who are involved in the decision-making process, regardless of industry sector. That's for PBEC in particular. For Air Mobi, I started that company last year after I left an operator, and that focuses more on the aerospace sector, the broader sector, if you like, including business and general aviation, while PBEC covers the 21 member states within APEC, the Asia Pacific Economic Council. So let's get started on this presentation today. So COVID-19, it's a phrase we've heard a lot about, and these webinars and these meetings, maybe we're getting a little bit tired of them. So I'll try to be brief on the COVID part itself. I think everybody's pretty familiar with it now and what it means. But first and foremost, it's a global humanitarian challenge that we're facing. And right now, thousands of health officials are heroically battling the virus, putting their own lives at risk. Governments and industry are working together, obviously, to understand and address the challenges that we face, support the victims and their families, of course, communities, and search for that vaccine that will hopefully get us all back to normality in the not too distant future. But how should companies be reacting around the world to act accordingly? Well, this presentation today is focused predominantly on aviation leaders understanding the COVID-19 current situation, which is fast moving, how it's unfolding within the aviation sector, and taking steps, perhaps further steps, to protect its employees, your customers, the supply chain dynamics of it all, and finally, the financial results, which have been really hard hit already in just a space of a few weeks. So the imperative of our time, well, that's the title of this next slide, and basically, we're looking, if you think about from a government point of view, to safeguard lives in general. So you've heard a lot about the need for ventilators, for PBEC equipment, and flattening the curve is something that you hear a lot that governments are using. And why is that? Because they obviously want to protect the loss of life, which, as you've seen, is increasing dramatically in some Western economies after it hit Asia first. And there's been some second wave of outbreaks, which we'll go into a bit further, as people have returned on repatriation flights in the last month or so. So preparing now, I think, for the recovery phase is just as important as learning to live with some of the lockdowns, or what some of them call circuit breaker initiatives by the government. So without going too deep into China yet at the moment, I want to talk about and look at ASEAN, because from a business aviation point of view, wearing my PBEC hat for a moment, it's possible to look at other green shoots of countries in Asia Pacific besides China's domestic travel uptick that has occurred in the last few weeks. So during this recovery phase, what are the reasons? Some of the reasons I will go into in a bit more later on about China will be explained. It's important, though, to follow these GDP forecasts as one of the major benchmarks. Typically, business aviation users and buyers' sentiment follow growth stories. Despite certain sectors in some Southeast Asian economies having benefited from recent supply chain shifts out of China, it is less clear that post-pandemic trends will be as favorable. National security considerations, especially in the United States and other advanced economies, now loom large over questions about pharmaceutical ingredients and inputs for and production of medical supplies, while travel disruptions and difficulties in the form of quarantines, health certificates, and the fear of travel itself will likely further accelerate the shortening of supply chains. This also affects the operations of business jets and aviation in general, as each country has been changing at its own pace, and the recovery will be no different. A word we're all hearing about quite often now in commentary is localism. Localism is a word being used a lot because when we talk about manufacturing of goods and services, it's most likely that people resort to more domestic manufacturing again in this post-crisis recovery phase and be looking at diversifying their reliance on too many far-reach countries. At a minimum, though, we can expect to see a sharp slowdown or recession in all of the ASEAN economies in 2020. These forecasts in the table that's shown come from the World Bank, the Asian Development Bank, and the IMF, World Economic Outlook. All see sharp declines in regional growth as a result of the economic shock of this pandemic. Despite the increasingly pessimistic forecast for the region, both the IMF and ADB project a strong rebound in 2021, but still seeing ASEAN economies in negative territory except for Vietnam. The impact of the coronavirus is hitting these economies through several channels. First, ASEAN countries are highly open to trade and investment, as well as tourism, all of which have been severely disrupted. Demand for these countries' exports, whether it's palm oil or metals from Indonesia, manufacturing components from Malaysia, Vietnam and the Philippines, or even textiles from Cambodia, have fallen sharply and will continue to stagnate throughout the crisis. The suspension and likely very slow resumption of tourism will hit the Thai economy especially hard, which depends on its tourism and travel spending for 1/5 of its GDP. And we also impact the tourist-dependent economies of Malaysia, Indonesia, Philippines, and Vietnam. Singapore has already been hit by declining trade volumes in the midst of the US-China trade conflict back in 2019, and is now facing a drop in trading goods as they experience a third wave of cases in Singapore. ASEAN economies have diversified, though, a set of trade and investment to a set of new trade and investment partners over the years, including the US, European Union, China, and intra-ASEAN trade. In normal times, this diversified portfolio of partners would provide a buffer for such crises. But in the global pandemic that we're experiencing, a halt on dimming prospects for growth still are there in 2020, with bleak forecasts in the United States, Japan, and Eurozone of as much as -8% in their economies. Secondly, the collapse in oil prices caused by sudden drop in energy consumption is also a factor that we need to think about, especially in exports of crude and natural gas. Brunei is especially vulnerable to this. Third, the sharp drop in domestic demand due to the lockdowns and other public health measures will have large multiple effects on these economies, since consumption represents over 60% of GDP in the major ASEAN economies, with Singapore being perhaps the exception. The fourth channel of economic impact from the global crisis is capital outflows. We've seen huge capital outflows already in 2020 to the tune of $100 billion so far. And Indonesia's outflows account for 8.2 billion of that already in just to the end of March. So what can we else, on the brighter side, what can we look for? Well, the shift of economic activity to the cloud during this crisis and the need for mobile tracking and other tech solutions to contain and respond to future outbreaks of the virus could benefit Southeast Asia. In particular, countries like Singapore, Indonesia, and Vietnam, which are already on the leading edge of mobile app adoption based on the digital economy. A global or regional shift in demand towards digital applications and government policies designed to support the sector could spur new innovations and boost entrepreneurship working within the digital economy, which would be a brighter future and growth opportunity for Southeast Asian economies, especially as we look to the recovery phase within this sector. Okay, so looking further on, I now want to look at update on airline demand recovery scenarios. These figures were taken in the last week of March and first week of April, so forgive me for not having the latest data, but it's true to state that more routes were cancelled outside of China mainland than restarted in early April globally. The drop since the 20th of February is the equivalent of falling off a cliff, with the world's aviation seat capacity more than halved than what was expected since mid-March. The latest updates show that airlines around the world have further reduced their schedules in April. The scheduled seat capacity week from March 30th to April 5th was 49.1 million seats. 2 weeks ago, in the middle of March, airlines had more than 100 million seats scheduled for the current week. So the capacity reductions continue, indicating a further 21 million seats vanishing in just the past 10 days. One thing still hasn't changed. The world's airlines still believe that the recovery will likely commence in the beginning of May. Still, we do not think we'll be requiring 100 million seats in the same month. The situation remains obviously dynamic as many governments impose traffic limitations in airlines to try to understand the real capacity needs for the current demand. So moving on to the eroded investor confidence that we're experiencing in most industries, this visual you can see on your screens right now really depicts the air and travel sector is suffering one of the most, yeah? So, however, as a percentage in dollar market cap, it is at the lower end of the spectrum in global economic terms. Nonetheless, the knock-on effect inflicts pain in all the other sectors, as air and travel is a key connector of the world economy. This data includes coming from the top global 300 companies by market cap in 2019, and the source is by S&P Global. So leading travel companies, what are they thinking and how are they acting? Well, navigating through the crisis is obviously at the top of their agenda. Most scenarios predict a very long road ahead. Managing the return, logistical nightmares being experienced, ever-changing health mandates at borders, shifts in the competitive landscape. Pivoting to the next normal or significant normals or unknowns, where and when will country, international airport borders in particular, reopen? What will the demand look like? How is the resilience of the staff after being furloughed or put on unpaid leave, reduction in their salaries, etc., and not been able to work with their colleagues in the same way for the last few months? These are all factors both from a mental challenging point of view, not just a physical challenge from the social distancing. So mental health would also play a role in how companies are agile enough to adopt and to take advantage of the recovery phase. So here are some of the questions that I'm hearing from clients across the sector. So what are the role as an industry and business leaders can we play when talking to government, for instance? What are the reasonable demands we can make that can be reasonably executed? The next few slides in a minute will be talking about some of the government relief packages. Continuous engagement, as I said before, with employees on their health, on their state of mind. Some may already be forced in taking some sizable pay cuts and they have family members to look after. They may have family members who are sick. How is that being handled within your organization is very crucial to keeping their loyalty and keeping their work efforts in check. How will end-to-end customer journeys change? Managing those expectations for your customers is key to that. The time it takes for passengers to be cleared on arrival, for instance, which we'll see how China is adapting to that in a second. So how will business aviation in particular, what's the value chain dynamics? Who will be weaker, who will be stronger in a post-COVID-19 world? So taking three of those questions, if you like, starting with the resilience and sustainability part. Liquidity is obviously a key at this moment in time. So what are the examples of government support? How are China supporting its own airlines and the hospitality section in particular? What are the implications of this government support, especially for national carriers versus commercial carriers, if you like, in the private sector or public sector? And questions investors and stakeholders are asking about the impact of such government support. The phrase cash is king is obviously true right now, but also many people also feel as governments print more money that cash and currencies will likely further devalue over time, and hard assets and a flight to safety will happen in gold, as seen as alternative safe havens. In the meantime, we still can't underestimate the need and importance of government's intervention and stimulus to avoid catastrophe, especially in the aviation industry globally. That said, government stimulus will not be made available to all business sectors and corporations or that of private individuals. And therefore, we are bound to see more victims of this crisis along the way. It is encouraging, though, to see our industry associations like ASBAR, NBAA, EBAA are taking active roles alongside IBAC in making sure we're kept informed of the latest border controls and what are the stimulus packages that we could potentially apply for funding to. Let me pause there for a moment and let you take a look at the next 3 slides with a little bit of background music. These next graphics and information are what was available at the 10th of April and are currently announced government stimulus measures, as well as some governments who outrightly stated they would not be assisting in the industry. It'll be interesting to see as time progresses whether these statements are reneged on, as many airlines are claiming a mayday situation for their own survival. Otherwise, a series of bankruptcies and further unemployment will be the result. Okay, so I'm back. Thank you for watching those, and I hope you found them of interest. In particular, Singapore is one to note in how it's supporting its Singapore Airlines here in the region. Also, Hong Kong is one to have noted, where they're buying over 500,000 tickets in advance to help national carriers like Cathay here. But will it be enough? And that's the question. Airlines are obviously going to be watching closely how these stimuluses affect their industries and their companies. Given the significant importance that the aviation sector is, in the UK, for instance, they are hesitant still and using only as a last resort after all other options have been exhausted. And that was quoted by the UK's new Chancellor of the Exchequer. Whereas other countries already announced this. In the US, in Singapore, I mentioned Hong Kong, Thailand, for instance, Malaysia is around the corner as well. So it will be interesting to really watch these dynamics as national carriers in particular are helped out versus those in the commercial domain. And how will they be disadvantaged by this? Because, you know, there were many commentaries by people like Walsh and Michael O'Leary of Ryanair and the International Aviation Group against these stimulation packages and allowing these companies to fall on their own swords by definition. So what are the characteristics of early demand when we look at the recovery phase that hopefully will be not too distant future? Well, I want to take a look at in the next few slides about China's green shoots, as we call it. What were the drivers of this early recovery, besides the medical equipment charters that we've seen and the domestic travel based on the first holiday, the tomb sweeping holiday that was held on the 3rd and 5th of April. This depicts here in this slide the early evidence that China has been enjoying a bit of a recovery. However, air growth overall has still plateaued. Domestic travel in particular is worth noting because as they unlocked the different cities and allowed travel to open up again, it was obvious that people would look at the first opportunity to get out of the cities. So we see here airlines, hotels, and some of the tourist attractions that opened up, and the city transport enjoyed an uptick in demand as we go into the latter half of March and early April. And a point to make was on the 8th of April, the Wuhan International Airport reopened to reduce schedule of domestic flights as Chinese carriers gradually resumed flying to the epicenter of the outbreak. It marked the first time scheduled flights are departing and arriving in the airport, which was shut down on the 23rd of January amid a citywide lockdown. China Eastern operated the first domestic flight out of the airport on the day, a Boeing 737-800 carrying 46 passengers that took off at 7:25 on its route to Sanya in Hainan Island. The carrier states it also resumed flights at other points to its domestic network, such at its hub of Shanghai, Xiamen, Ningbo, as well as Guangzhou. It noted that it carried out more than 1,600 passengers at the end of the 8th of April, including 1,100 outbound passengers in total. It mounted more than 30 flights on that first day of operations out of Wuhan. Its compatriot, China Southern, saw its first flight take off bound for Chengdu. That was operated also by a 737-700 series carrying 81 passengers. On its first day of operation, operated 48 flights, the most amongst its three national carriers. Reinstating routes included Guangzhou, Kunming, and Haikou. The carrier also resumed flights at other points in Hubei province, which Wuhan is the capital of, before 8th of April. Hubei was also placed on lockdown as a consequence of the outbreak as it grew in magnitude. Like China Southern, Air China's first flight of the city was also bound for Chengdu, an Airbus 320. I'd like to share a picture where China, in particular CAC and the Airports Authority, marked the first flight arrival by Xiamen Airlines into Wuhan Airport. Wuhan is a large manufacturing city, as we know, for medical equipment in particular, and with this airport reopening, it should result in quicker logistics of cargo flights being able to pick up such equipment and distribute it on a global scale. So here they were welcomed with a double water salute upon arrival to mark the occasion by the fire trucks. So moving on to the recovery part that China's enjoyed, as I mentioned, some of the destinations there that we've been seeing them flying to, three here are noted in Chengdu, Sanya, and Beijing. And you'll see that Chengdu and Sanya in particular have enjoyed an uptick, in particular over that bank holiday weekend from the 3rd to the 5th of April. And the analysis also shows that it's younger people, the millennials, that tend to be traveling at this time and are less fearful of the COVID-19, whereas business travel is still at a low level as businesses return to work. Beijing has obviously been one of the last to release its lockdown as the capital city, and therefore the recovery percentage is at a lower ebb, but we expect that to start increasing further during April. The nascent recovery is being led by domestic trips, as I've mentioned, economic hotels in particular, and the younger travellers. So when we look at business aviation domestically, have we seen similar upticks? Well, talking to people like at Sinojet and Global Wings and others, they are reporting a slight uptick in domestic business jet and charter movement that have recommenced, but not exactly giving too much details at this time as to the exact purpose. However, the hunch is that it's mainly for leisure, to visit second homes, get away from the cities, and to visit extended family members and friends after the prolonged lockdown and social distancing measures to check on them. So in terms of hotels section, which has been badly hit, as we've seen, as in particular talking to Marriott hotels, the mid-scale and economy hotels in particular are starting to see a little bit of the recovery, but still from a very low starting point. Here, I wanted to share a Wall Street Journal report that China experienced during that Tomb Sweep day. I think when we look at the percentages, we need to take it with the fact that it came from a very low base from the week before. So Trip.com and things like that that typically are where people go to book their flights and hotels has seen a significant increase, particularly for that bank holiday weekend. However, when we look at the attractions, some worked better than others. And you can see from the picture where there's been a free notice to attract people back to a particular famous mountain attraction in Huangshan. This had to be closed 2 hours later due to overcrowding. So also the Shanghai government, it must be noted, ordered major tourist attractions to open, but then reclosed them a week later in early April. And we're waiting to see how they're managing the reopening in a better second time around phase. So moving on to the other question, what will it take for people to feel comfortable traveling again? Can travel be stimulated, and how? So here I'm going to look at both what's the experience of China right now in how you're traveling domestically, or how they are traveling domestically and the systems they put in place, versus US corporates and executive sentiment. So let's take another wee minute for some calming music. I trust to observe typical travel journey of air passengers within domestic China right now. Despite the slight uptick in demand, it seems a very complex process. We also asked US executives what their sentiment was like and are thinking about when and how business travel will return. So back in Mo. Thank you very much. Okay, so I'm back. Thank you for watching my presentation today. And we're really coming to the concluding part of the presentation. And I want to really focus on the implications that we have and some of the solutions that we should be thinking about and opportunities. So the last couple of slides, as the music was being played, we saw sort of the green, red and yellow QR code systems that are being used in China. And I have to say, that is something that could really work well in facilitating a smooth transition back to international travel. So it's something to watch out for, especially for business and aviation, business and general aviation, where knowing if you can travel, where you can travel, when you can travel is going to be key to getting inquiries up and owners back utilizing their assets. So with that, we're going to look at optimizing liquidity and goodwill with employees, which we mentioned before, customers, guests, members, governments, and the public. It's very important to have this continuous dialogue, if you like, and getting in touch with them. Maybe it's even important to identify those customers who are not performing for you as a company. You know, we can't act as banks. If they're suffering and trying to put it onto our companies, is it really fair? Can we give those sort of lines of credit like we used to perhaps before, especially management companies? I think it's important to look at deposits on account and things like that to safeguard your own cash flows. So we need to also embrace things like agile management. The whole operational environment that we face is going to be very agile indeed. And we need to be not afraid of trying new things and experimenting to seek creative new demand signals from your sales department and marketing department, things like online content and communicating through live webinars or recordings. You know, Asian Sky Group, for instance, with their podcast initiative the last months or so, has been well received, as has the Corporate Jet Investors Town Hall live meeting. So these are really great platforms to keep the engagement going from an industry-wide perspective and share some of the issues that we're suffering and maybe find solutions together as well. It's all important to share in these times of difficulty. We also need to lead and master new safety protocols. Obviously, safety has always been at the top of our agenda in the industry, and the complexity now added by this coronavirus, we need to support our safety departments even more. There will also be many new normals, which I've described before, not just one. So how will you adapt your business accordingly? I also feel that new investments should be aimed to accelerate the transition perhaps to a climate neutral economy. With all that is going on, the protection of biodiversity and the transformation of air travel to being more sustainable in nature and eco-friendly is going to be a key driver for the new demand, especially amongst the millennial generation. They're going to expect companies to be acting. And that's going to be a major challenge because the spare cash is not there to necessarily, especially for airlines, which were targeted by companies like Nascent to be the customers in the first phase of uptick in things like sustainable aviation fuel. So will governments tilt further away from globalization and the freedom of movement? That would really harm our industry, and we would like to make sure that we're pushing against that, whether it's trade or specific travel industries that we work in. So stay close to your customers and partners as they work through the implications and get ready for the recovery. So in the recovery, and I think it's important to link back maybe to the low carbon aviation industry in a pre-COVID world that was being focused on at the end of 2019 in particular. There was a lot of talk about the 2050 zero carbon targets. So it's important that my presentation in concluding may be slightly misleading in its title from the previous content, but I think sustainability is more about the resilience of a sector, of a company, or even an individual's own mental resilience and its ability to upskill itself, adapt, and remain relevant. It's also very useful to make sure that you're communicating with your employees, your stakeholders on a regular basis with your ideas. Cost controls obviously have been a driving factor in our industry over time, perhaps sometimes to the detriment of quality. Margins are typically always thin and competition fierce. So it begs the question, has COVID-19 adversely affected the low carbon industry target of 2050, especially when we are being one of the main polluter targets by governments alongside airlines? The sector has little or no cash, especially now, to spare on more expensive alternative aviation fuels touted by the fuel giants. I spoke to Nestie only a few weeks ago, and these are some of the observations we discussed. So we've mentioned in quite depth earlier economic stimulus and the importance of government intervention, but that doesn't mean necessarily that it will be geared towards energy transition at this stage. It will be more about saving jobs, perhaps, and therefore driving down emissions is not a priority in the short term. But investors, and private investors in particular, can help counter that in looking at what new investments they're willing to invest in and making sure they're green enough and impactful enough, especially when it comes to carbon, which is the public enemy number one, besides this COVID-19, in protecting environmental concerns. Government intervention we've talked about. Obviously, they can steer the industry in a different direction if they decide to support or not. In the US, it looks like they are looking to support, and MBAA have been definitely helping in that. And I hope that Europe is following suit, is going to give some of the money towards business and general aviation sector that's been earmarked for aviation. But money ultimately talks. And when we come to talking about the aviation fuel and the new products that are coming down the pipe, it's really emphasis is on the oil and gas companies, which are the most profitable typically, that can divert those profits into energy transition. They make obviously investments in new technologies as well, like carbon capture and storage. And that investment is going to be more important than ever, especially in adjacent sectors like solar, wind, battery charging. And these are the sectors that are going to continue to be the fastest growing over more traditional sectors. Sustainable aviation fuel transition has taken a major blow during the last, especially the first quarter of 2020. We've already seen airlines deferring their commitment to batches that they've ordered. And the price gap between SAF, sustainable aviation fuel, and Jet A1 fuel costs are going to remain there. And it's going to be hard to justify for stakeholders, particularly airlines right now, to justify bridging that gap without government support. However, in talking to Nestie, it is clear that they feel airline groups, especially larger ones, and certain governments in the Scandinavian area will and must play a major role. This time right now is crucial for such industry to look at ramping up production and accommodating this production by investing in the infrastructure required to bridge the gap. Because ultimately, the supply needs to match demand to bring price down. We can stimulate the market by just our own sales and business development efforts through companies like ours and others, and groups like PBEC, who can challenge the government to be supporting these initiatives more. And finally, what is the role that business aviation can play? Well, actually, it can be the catalyst. We've seen it already being used by OEMs in using it for the air shows and in demonstration flights, and that should really be expanded to general use. Singapore is enjoying, over the next couple of years, with its oil refinery from Nestie, the ability to supply locally. And China is also using, is also getting on board with this, and will be also adding supply to the market in mainland China. So our job is really to be continuing the advocacy and lobbying efforts to remain an essential economic driver, especially during the recovery phase of post-COVID world, especially as safety, security, and health is a priority, especially for customers and senior executives to fly globally once again. So with that, I come to an end of my presentation. I want to thank you for watching and listening. Here's a little bit about us. But in the conclusion, I want to first of all thank Asian Sky Group for giving us this platform to share this content with you and my own thoughts today. It's been a pleasure and a privilege. It's obviously a fast-moving situation despite the partial lockdowns, circuit breakers in place in certain countries. This uneven picture is exactly the challenge we face, especially operationally. It will continue, but I am confident with the wonderfully talented people we have in our sector, things will only improve and there will be new opportunities presenting themselves. That I have no doubt. It just leaves me to wish you good health, stay safe, and I hope to see some of you in person very soon. Feel free to reach out to me directly. You can find me on LinkedIn and connect there. These slides can be made available. Just ask Asian Sky Group or myself directly. Please take care and goodbye for now. Thank you so much. Bye-bye.